In a recent eye-opening interview with Wedbush security analyst Dan Ives and Herbert, Dan Ives revealed some interesting insights. Dan Ives is one of Tesla's biggest bulls and supporters, consistently bringing out Tesla's strength even after Tesla's Q4 earnings call. While he temporarily lowered his price target for Tesla from $350 to $315, he remains bullish in Tesla's future. Today we're talking about Dan Ives staying bullish on Tesla, but warning about near-term issues that Tesla investors will have to face. Also, we'll talk about the latest news in the stock and Elon Musk for a couple of minutes, so stay tuned. Welcome to my channel where I give you the latest Tesla news. Dan Ives has some real issues with the company in the near term. Dan Ives is the managing director and senior equity research analyst at Wedbush Securities. Known for his deep expertise in the technology sector and insight into major technology companies and trends, Ives' perspectives are highly valued. Dan Ives mentioned that his long-term thesis has not changed in terms of disruptive technology. He says that Tesla is going to own more and more of the EV market share and the AI thesis, he said, as it all plays out. For a stock in a public market, you have to be able to communicate, especially right now with price cuts, perspectives, margins. Conference calls, he said, are a huge opportunity and was missed, which is the reason why this stock sold off. I also have a little bit of a different theory with that. So for one, I believe Elon Musk kept expectations lower for 2024 simply because a more positive outcome will increase the value of the shares dramatically by the end of the year. But that's just my personal thinking on Monday morning at 5 a.m. Let me know if you have some thoughts about this, and if you disagree with me, comments down below, please. Thank you. I've said in the interview he believes the stock's not doing much within the next 4 to 6 weeks. I've said he needs to see evidence of buybacks, not price cuts. He mentioned that some investors watching this might say Wall Street is short-sighted, but when we go back to it, because of Wall Street, Musk and Tesla were able to raise money. The reality is that it is their biggest currency. So Dan mentioned that 80% of the reason the stock is down is communications, and 20% results of guidance. A missed opportunity, Dan said. Dan believes that buybacks would be his number one. Big tech companies do buybacks. The nature from a confidence perspective were capital allocation for a company that has $30 billion of cash going to generate more cash. It is important to send a signal. And the number two he mentioned is giving some guardrails for the broader AI strategy in terms of laying it out for investors, medium and long-term targets, whether financial or qualitative. Because as much as the retail community will say it's just Wall Street, the reality is institutional investors are huge believers in the long-term Tesla story. Dan said it is important as we lay out with the list of AI to the voting in terms of ownership structure that Elon Musk was talking about, to buybacks, to some of the targets, he said. So let's talk news. So last Wednesday, as reported by Benzinga Newswire, Elon Musk's tornado situation for Tesla, analyst calls for a plan to satisfy CEO. The 2018 compensation plan for Tesla CEO Elon Musk that was worth $55 billion was voided Tuesday in a ruling by a Delaware judge. A leading Tesla analyst weighs in on what the ruling means and what's next for Tesla. Delaware Judge Kathleen McCormick made a shocking ruling against Musk and Tesla on Tuesday. Ives mentioned that the lawsuit has been struck in a Delaware court and was widely viewed by investors. It would be thrown out, and instead it now creates a tornado situation for Tesla's board and the next move, with the street closely watching this poker move. Tesla's board can appeal the decision, create a new compensation plan that replaces the 2018 one, or create an entirely new compensation package that includes getting Musk back to the 25% voting share he recently requested. According to Ross Gerber, that the court's decision necessitates the appointment of fresh independent board members to oversee Musk. I just hope that Ross Gerber will never be on that board. So if you like this kind of content, please subscribe, turn on your notifications so you won't miss any updates. Thank you. However, the CEO might not quit, given that his exit will drop Tesla shares value and subsequently the value of the 13% stake he holds in the company. The report added, citing the director of the University of Delaware Corporate Governance Center, Charles Elson. Meanwhile, Musk held a poll on Tuesday on whether Tesla must incorporate into Texas. I said yes. What is your opinion? Leave me a comment. On Thursday, Benzinga reported that Cathie Wood sees 95 to 100% of all vehicles on the roads as EVs by 2030. ARK Invest's Cathie Wood says if robotaxis gain traction, EV giant Tesla is best positioned amongst rival players. The investment firm lists electric vehicles amongst the many developing technologies that might displace old technologies and create new markets. ARK hopes to develop other technologies, including artificial intelligence, digital wallets, robotics, and reusable rockets. Robotaxis are currently operating in about 20 cities across the globe, with fully driverless commercial options in at least 7 cities. Also on Thursday, Elon Musk announced Tesla vote on Texas after pay rejection. Elon Musk said the company would hold a shareholder vote to decide whether to move its state of incorporation to the Lone Star State after a Delaware court ordered him to give up his compensation package valued at $55.8 billion. After this announcement, the stock moved higher. I'm not sure why a judge decided that Musk must be denied his pay package after majority of the shareholders voted in favor of his compensation. It might be political in nature. What do you think? Let me know your opinion. And Tesla upgrades the Model Y in China with advanced self-driving hardware but no price increases. MarketWatch. ARKK and ARKW keep buying Tesla shares. Cathie Wood took advantage of the worst month in more than a year for Tesla Inc. and scooped up more than 150 million worth of Tesla shares. ARK bought 48,865 shares of Tesla over the past 3 days. In January, ARKK bought 628,675 Tesla shares. ARKW bought 113,793 Tesla shares in January. Also, Elon mentioned on X that he might split the corporation depending on the parts of the business between Texas and Nevada. We'll find out. So I hope you enjoyed today's video, and if you want to know what happened with Tesla in January, there's a whole list you can watch right here. So thank you so much. My name is Claudia. Goodbye.